Good morning, everyone, and I'd like to welcome both new investors and obviously our current investors to this Invictus Energy webinar. Very, very pleased to have one of these again, and on the back of some very good news and a very well-supported capital raise for the company. It's been very pleasing to see the support that we've had from both some very, very substantial institutional investors, as well as some current existing investors who are keen to continue to support the company. It's very pleasing to have it done flawlessly through PAC partners who've been great in this process, and to provide you an update with this new investor presentation as well, and share the company's plans for the future and what our exploration program going forward entails. So the agenda for today, firstly, this webinar is being recorded and it will be available after the presentation, and that should be again on our YouTube channel, and also if you've registered for this presentation, you should be able to click through and see the link. So the agenda for today, I'll go through the capital raise overview, why we undertook it, and what it's going to be used for. I'll run through this new investor presentation after that, and then some Q&A. There is a Q&A section in the Zoom buttons that you can send through some questions. There are already a few that I've collated and put together at the end of the presentation, but please feel free to send through some additional ones, and I can go through those at the end. So firstly, the capital raise overview. As I said before, very, very pleased to have completed an $8 million capital raise. It puts the company in a very strong position and will allow us to fund the immediate future work program, consisting of our seismic campaign, which will be getting underway very, very shortly. The contract is ready to go. There's a few minor bits and pieces with the technical parameters of the program that we're finalizing, but details of that should be out very, very shortly. The other thing that the funds that will be put towards is to order long lead drilling items, and that's wellheads and casing, which at the moment has about a 6-month lead time. The aim of doing this capital raise is to preserve our timetable and also the costs. We've managed to negotiate the seismic program at the bottom of the cycle. We've got some very, very good rates. We've been working with our contractor for quite a long time to get this, and we want to make sure that we're able to preserve our seismic acquisition slot for Q2 this year, which is just around the corner, and also to make sure that we have our long lead drilling items arrive in time so that we can execute a basin opening drilling campaign. The placement was very, very strongly supported by institutional investors as well as current investors, and we had enormous demand. The book opened on Monday at 7 a.m. and by 10 a.m. we had bids for multiples of what we went out for. So again, very, very pleasing, and it's put the company in a very, very strong position. So we are really happy with the results, and stands the company and shareholders in good stead. And now we're entering the really exciting part of our exploration program, and I'll show you a sort of analog company example in a bit, but we're excited to really get on the ground, execute the seismic campaign, which is going to add significant value, and then what everyone's waiting for obviously is a very, very big drilling campaign for one of the largest targets going around globally. So I'll run through the presentation now, and firstly, we've been able to secure our Cabora Bassa project because of our competitive advantage. And as you can probably tell from my accent, I am from Zimbabwe. My family's still there. I've been there a very, very long time, know the jurisdiction very well, and I've done a lot of business there, and was able to recognize this opportunity ahead of anyone else in the industry. We've been very fortunate that this has been locked away for not technical reasons, more so the above ground issues, but that has changed now, and I'll run through the significant changes that have enabled us to to be able to invest in this opportunity in Zimbabwe. Mzorobani prospect, which Mobil initially identified and we've worked up further, is the largest undrilled conventional prospect in onshore Africa, and at 8.2 TCF and 247 million barrels of condensate, which is around about 1.6 billion barrels of oil equivalent, which has been independently verified by both GTEC and Netherlands Sewell & Associates, is one of the largest conventional oil and gas targets going around globally. And so a very, very exciting and material opportunity to have, particularly for a company our size, and to have been able to maintain a high equity portion and to this point is obviously very, very key to driving some further value. And we've been very lucky to have this. So because we've got a lot of new shareholders who've come onto the register in the last few months, as well as on the through this capital raise, I'll just recap some of the important points for those who are new to the Invictus story. So Invictus came about in 2018 when I vended the project into the Interpost Holdings shell. And this opportunity we've been systematically attacking over the last 2 to 3 years, putting all the building blocks in place. It has taken a little bit longer than usual, and that's because we are dealing in a jurisdiction that hasn't had much oil and gas activity since Mobil left the country in the mid-1990s. And so it's taken a little bit of time to put those building blocks in place. Those building blocks have consisted of the technical side of things, which has been taking this Mobil data set that we've inherited very, very fortunately, which I saw when I first looked at this project and saw this very material Mzorobani structure and seismic data set sitting at the geological survey that we would be able to process for a relatively small amount of money and work it up technically. On the commercial side, it's all very well to discover 4 or 8 trillion cubic feet of gas and 200 million barrels of condensate. But the very important thing is if you can't monetize it, then there's really no point. And so being able to demonstrate the market opportunities in Zimbabwe and the rest of the region has been very, very important. We've been very lucky and fortunate that we have existing gas buyers in Zimbabwe domestically that are sophisticated gas buyers in Sable Chemicals, who manufacture fertilizer, who are currently importing gas from South Africa. And so they've come to us and understand that even though it's at the exploration phase, that gas is a feedstock that they want to secure, and they want it to be at the front of the queue regardless of the size of the discovery that we've made. So we have inked a gas sale MOU for 70 million cubic feet a day for 20 years, which is around 510 BCF over that period, as well as a further one with Tatanga Energy, who are a gas to power developer. And that would be for 100 million cubic feet a day for 20 years, which is another 720 BCF. So all in all, over 1.2 trillion cubic feet of gas supply that we can monetize very, very quickly in the event of a discovery. And then finally, the final building blocks that we've been putting in place are to make sure that the above ground conditions are conducive to large-scale capital investment that oil and gas requires. And that's putting in a stable and transparent legal and fiscal framework. And that will ensure that we can develop these assets rapidly on any success, and also that the rules are set in place and the country derives a fair share of the resources as well. So this has taken a little bit of time to put in place, but I think what is being started to recognize now is that all of these building blocks have provided a very solid foundation for the company and for this opportunity. And that going ahead, we've got the exciting part of our work program with the seismic and drilling coming up, and that's really what's going to drive the future value, and we'll see us be able to rapidly develop this if we have exploration success. A little bit about the company and our board. So firstly, myself, I'm a reservoir engineer by background, so a technical background. I've spent a lot of time at some of Australia's largest companies, being Woodside Energy, and working on all of their major offshore assets, as well as in the new ventures space, and business advisor for global new ventures, particularly when when Woodside was getting back into African exploration. And then more recently at AWE, and was the lead reservoir engineer for the Waietse gas field, which was the largest onshore discovery in Australia for 40 years, and leading that reserves work, the forecasting, and the commercial work. So very importantly, familiar with the exploration side of things, but also what it takes to monetize assets and really maximize the value of anything that you discover with your development programs. Stuart Lake joined the company in mid-2019 and has a prolific track record. He's operated all over Africa and had tremendous success, most notably in Ghana, where having led Hess in 7 consecutive discoveries in Ghana, he's also been involved with Apache and of course spent a long period at Shell. He's worked in both big and small companies, and still likes to get his hands dirty and is on the tools, and very, very fortunate to have someone of Stuart's caliber join the Invictus team. And Brent Barber, our country manager, actually led Mobil's exploration program in both Zimbabwe and Zambia, and he's very, very familiar with the jurisdiction. He lives in Harare, and it's been very, very pleasing to have Brent come back for some unfinished business, he feels, and to see us through this exploration program and hopefully a discovery. From a corporate overview, from the share price performance most recently, I think that's been a combination of one, people starting to recognize that we've put all the building blocks in place for this company and for the opportunity, and two, the macro factors for oil and gas have obviously increased, and we've staged a major recovery from what was a very, very difficult year last year in the industry, but it has bounced back, and I think people are realizing that oil and gas is going to be around for a very, very long time and not going to be replaced. Particularly on the natural gas front, it is a very, very key future energy source, particularly in Southern Africa, with coal-fired power being retired and growing demand for energy in the region that's already energy starved. The capital table metrics have been done based on the cap raise price. The addition of $8 million into our coffers has put us in a very, very strong position. I think we'll remove that perception of us needing to raise future capital and become issue. Being the single largest shareholder, I do look after our cash as if it's my own. We run a very, very lean ship, and we've managed to progress this opportunity to this point with very, very low cost, and so we've kept the capital structure intact and kept dilution to a minimum. From the asset overview, and where we're located, so our Cabora Bassa project, which is Special Grant 4571, which is the name of the permit, is located in the north of Zimbabwe, up here near the Mozambique border. We are surrounded by a number of companies that are operating in the region, but as I mentioned, Zimbabwe has been off the map from an industry point of view because of a number of factors. Firstly, when Mobil left in the 1990s, having spent $30 million in today's money acquiring a very, very good data set that consisted of gravity, aeromagnetic, 2D seismic, and geochem, concluded that the basin was more likely to be gas prone than oil prone. At that stage, there was no market for gas in the region. There was an abundance of energy supply with coal-fired power and hydroelectric and excess electricity being generated. And so Mobil saw very, very little point in trying to monetize additional gas. Down here at the number 7 bubble is where the Panda and Tamane gas fields are in Mozambique. those were discovered by Gulf in the late 50s and early 60s, and were still sitting idle and hadn't been monetized by that stage. And so Mobil saw very little point in trying to discover more gas. Probably a further note is that further north, to the north of us in Kenya and Uganda, had also seen a lot of exploration activity from the likes of Shell, as well as BP in Tanzania. And the majors left in the mid 90s because of another industry downturn at that stage, and the countries in further north don't have the mineral wealth that Zimbabwe has, and later on started promoting the petroleum potential once again, and managed to draw in the likes of Hardman Resources, who are Australian listed here, and the likes of Tullow, and have followed a similar work program to what we have, and reprocessing some of that data that the majors left behind, and going and drilling, and very successfully in opening up those basins in Kenya and Uganda. Whereas in Zimbabwe, there was the belief that there was no appetite for gas assets, and there hasn't been for a while. That, of course, has changed, and also there was no promotion of the petroleum potential. So this opportunity has sat and hasn't been looked at by anyone. Mobil were, of course, exploring in the pre-internet days, where none of this data was put in the public domain, and so was sitting there and unknown about by anyone else in the industry. And we've been very fortunate to have access to this because of our competitive advantage and our presence in the country. So what we're doing is following a similar playbook to what Hardman have done in Uganda, and what Africa Oil and Tullow did in Kenya, in going in and re-looking at and re-evaluating these assets. We also have the advantage of seeing what's worked in those basins, and there are some similarities from a rift basin setting perspective in what we're exploring here. So there's been a lot of other exploration activity around us, and now we've managed to get a very, very good foothold in the Cabora Bassa basin to undertake our work program. So in the first period, this was about mainly de-risking it technically and making sure that the targets that we believed were there were large enough and attractive enough to chase. With that being the case, after we completed our prospective resource estimate, then put in place the fiscal framework and the commercial framework so that we could develop this as quickly as possible. And that has now just about been completed with the petroleum exploration, development and production agreement waiting to be signed by the Zimbabwe government. And so we've entered into our second exploration term, which runs till 2023. And now we're executing our major exploration program, which is acquiring further seismic data and drilling at least one exploration well. And this is a seismic slide from the reprocessed seismic that from that exercise that we undertook in the initial part of our work program. And again, what has been very, very pleasing is although Mobil did identify this big structure, the seismic data back then in the early 90s, if you think about processing capabilities and computing power, this data set is about 16 gigabytes in size, and only very rudimentary processing could be applied to it back then, because your computing power was very, very limited in 1990 when this data set was shot. We've gone and reprocessed this data and been able to unlock new insights, as well as comparing it to other successful rift basin settings further north. And we've been very, very pleased to have identified some additional prospectivity besides the Upper Angwa. And when we first looked at these huge, big structural targets are very, very rare to come across in the modern day that haven't been drilled. And the reason that this hasn't been drilled is not for technical reasons, but again for commercial reasons, being perceived as more gas prone in an age where gas was unwanted and unneeded, but also from an above ground perspective, where the investment environment in Zimbabwe after Mobil left up until recently has been very, very challenging. So the independent prospective resource estimate that was undertaken by both GTEC and Netherlands Sewell and Associates. We did this independently because we knew it was going to be large, and so we needed some independent estimates done because it's very, very rare to see something this size. And whenever I go to some of the industry conferences, people are always shocked when I put the slide up and show them the scale of this structure. 200 square kilometers under closure. It is the largest undrilled structure in onshore Africa, and would have been drilled anywhere else in the world by now if it had been known about. And so this independent estimate is comprised of 5 prospective horizons. The main one is this top upper Angua, which we think is likely to be the most successful, and fortunately it is the largest target. So that's a good coincidence to have. It's got both source rock and reservoir in the same sequence. And one of the great features of this structure is that we were able to target all of these 5 horizons with one single well. So a very, very exciting and material target to be able to chase. That's 8.2 trillion cubic feet and nearly 250 million barrels of condensate. And being able to do it onshore with one single well is hugely exciting. I think from some of the comments that have been made by Netherlands Sewell on this structure is the last time they saw one of these sort of big structural targets like this more recently is offshore Mexico, and probably a similar scenario where the Mexican oil industry was nationalized in the 60s, and you haven't had any modern data acquired through there, and only recently when Mexico reopened to private sector players in 2015 have we started to see some of these new things come to light, which otherwise would have been drilled. So going forward in our exploration program, so this is a north-south line, by the way. This is the basin margin through here, and the Rift Basin shoulders. This is the seismic line 13, which runs through the heart of this Mzarabani prospect. And these seismic line spacings are about 15 kilometers apart, mobile shot reconnaissance scale seismic. And that was to look at the configuration of the basin and to see if it warranted any further seismic to go and identify some specific targets. Generally when you shoot seismic on this sort of space grid, you might see something on 1 or 2 lines that may be interesting, but to have this intersect multiple lines just because of the sheer size of the structure is fortunate. And when we got this data set, we were very confident that it wasn't going anywhere if we reprocessed the seismic. It's not something subtle, so it was a very low risk opportunity from a technical perspective. So we're going to go and infill in our seismic program to about 2 to 3 kilometers, which is your typical pre-drill spacing. And also we're hoping to unveil some additional prospectivity within that, because you don't generally get trap sizes this big, and you'll be able to hide a number of other features within that this 15 by 15 grid spacing through here. So the seismic program is aiming to achieve those 2 things. From where we've come from from a history, and these are some of our strategic milestones and what we plan to do going forward. So we acquired this project in the first half of 2018, then spent the second half of 2018 and early 2019 on the technical front, de-risking and unlocking that mobile data set, resulting in that very, very large independent prospective resource that we announced in July 2019. We then went about de-risking this from a commercial perspective and inking those gas sale MOUs. In early last year, we've got some good recognition from government and were awarded priority project status. This is one of these projects that has the ability to change the country, and it is, from a patriotic point of view, very fortunate that I'm able to pursue a project like this in a jurisdiction that I know well and be able to make a difference. And if it does work, it'll change the energy landscape, not only in Zimbabwe, but in the rest of the region. We were awarded our environmental impact assessment was approved for seismic and drilling in September last year, which paves the way for our forward exploration program. So that's all the technical and commercial side of things out of the way. And from the forward work program now, concluding our petroleum exploration development and production agreement with government, which will see a transparent legal and fiscal framework put in place. And then the really exciting part, which is going to be the exploration phase, commencing with our seismic campaign next quarter, which is just around the corner, and then planning for a very high impact basin opening drilling campaign. And we're planning, with the long lead items, providing they arrive on time towards the end of this year or early next year. So a little bit about the above ground side of things in Zimbabwe and what's changed. When I first came across this asset, the investment environment was very, very difficult, and Zimbabwe was shunned as an investment destination because of the difficult policies that were in place. When the new government came in, they have recognized that foreign investment is needed to bring in significant capital and develop assets in the country, and they've gone about and put in both macro and micro reforms to aid that. Most importantly, amending the Indigenization and Empowerment Act. You have 100% foreign ownership of assets that is allowed now, whereas previously you were mandated a majority government or local partner. One of the other things that's been brought in that I think really demonstrates government's commitment to bringing foreign investment into the country is special economic zone legislation, which provides you with legal and fiscal stability and has a host of fiscal and non-fiscal incentives, which really insulate you from any of the sort of normal concerns that people have of investing in frontier jurisdictions. So very, very attractive from that point of view. And then finally, with the production sharing agreements in place, which is for industry specific side of things, it will put Zimbabwe on level footing with other jurisdictions in the region that are attracting oil and gas investment, as you saw from that map earlier, and will provide a clear pathway for development and infrastructure access, but also provide the country with a fair share of resources on success. And so with this all in place, it's a win-win situation for investors and for the country. Looking at the market side of things, and if we do discover 8.2 TCF of gas and 250 million barrels of condensate, what are you going to do with it? So the energy dynamics since Mobil explored there in the mid-90s has changed dramatically. You've had a growing demand for electricity and supply shortfalls, which is a combination of underinvestment, but also the retirement of coal-fired power in various parts in the region and in South Africa. In particular, that's coming to a crisis point with nearly 20% of South Africa's power generation set to be retired in the next 10 years. There's already blackouts and brownouts in South Africa in the region through the lack of supply and an increasing demand. And so the electricity market is very, very rich to tap into. But also the gas market has developed quite substantially in the region. So the Panda and Tamana gas fields that I mentioned earlier in onshore Mozambique were finally developed by Sasol in the early 2000s, and that provides about 85% of South Africa's gas supply at the moment, and soon to be 100% when Mossel Bay is shut down in the very, very near future. And Panda and Tamana are peaking, come off plateau in about 2023, 2024, and that provides about 500 million cubic feet a day of supply into South Africa. However, the gas consumption forecasts as well, and gas supply demand balance in South Africa also looks very, very bleak from a supply point of view, where there's an estimated shortfall of around 1 billion cubic feet per day by 2030. So there's a gas supply crisis coming in the region, East Coast Australia on steroids, if you will, and premium pricing already commanded in South Africa. So where our project is up in the north of Zimbabwe here, it actually is very, very close to the spine of the Southern African power pool, and that provides us with access to basically all of our neighbors, and will enable us to export power anywhere from Cape Town all the way through to the Congo. So being able to supply electricity into a very, very short market is attractive, but also a big regional gas opportunity too. However, that's not the end of it. Where Mobil saw gas being sort of unwanted eventuality in success, we see a very, very rich market to monetize gas into power generation. I mentioned already petrochemicals, and which is supplied from this Panda and Temane gas field, and as well as coal, is going to require even more gas in the future because of dwindling supply, but also the requirements to clean up the feedstock source. The fertilizer market, Zimbabwe and Zambia are both very, very large agricultural-based economies, and Sable Chemicals at the moment is the sole manufacturer of ammonium nitrate fertilizers in Zimbabwe, but also is only servicing a fraction of the demand, with the rest of it imported. And so the increase in fertilizer supply into those two countries is a very, very elegant solution, which works for everyone. Industrial customers as well, very industrialized economies in South Africa in particular, as well as Zimbabwe, which will, once the infrastructure is built out from a gas supply point of view, you'll get industrial customers which will start taking gas, for their operations. We've seen that in South Africa as soon as the Panda and Temane pipeline, the Romco pipeline, was built. That pipeline now has around 300 customers through there, and we saw a similar thing in Tanzania when Mnazi Bay and Songo Songo were developed from pretty modest start of 20 million cubic feet a day. That's now gone to 200 or so within 10 years. So the messages for gas in the region is, if you build it, they will come. And finally, I think from a market's point of view, one of the real elegant solutions that's emerged over the last few years is small scale LNG. And for mining rich jurisdiction, that is Zimbabwe, South Africa, Zambia, and the Congo, you have a lot of off-grid miners who are running their operations from diesel, because they're away from the power grid, which is a very, very expensive endeavor. With small scale LNG, you can truck gas, and your range is, depending on the number of ISO units that you're trucking, anywhere from 500 to 1,000 kilometers, which at the moment is replacing truck diesel in any case, and that can be delivered at about 40% of the cost of diesel. So you'll have a lot of those off-grid miners who will switch to gas if it becomes available as well. So not only is there a rich market, but there's also a lot of infrastructure in the region. So where we are up in the north of Zimbabwe, we are very, very close to one of the major transit routes, being what's called the Bara corridor by rail, and you have a lot of the bulk commodities within the region that are imported and exported through that Bara corridor region. So copper from Zambia, copper from the Congo, all of it runs through Zimbabwe on its way to the Bara port. So that's a very, very well-established route, and provides us with direct access to the ports. We've got a tarred road that goes all the way into the basin. So we're very, very fortunate from an infrastructure and mobilization point of view. There's a lot of rail infrastructure around which we can also utilize, and have a virtual pipeline with small scale LNG. There are gas pipelines in the region that we can tap into. The offshore discoveries in South Africa through here, we are actually closer with a new build pipeline to bring it from where we are to the Romco pipeline and down into South Africa than you are building a pipeline from offshore Mossel Bay up into the industrial demand centers. So as well as being offshore and much cheaper to develop. So we're in a really central access from a demand point of view, and lots of infrastructure for us to to monetize into the multiple markets. Finally, I think what's also probably being starting to get people's attention is some of our neighbors in the region who are undertaking similar work programs and providing a lot of success. So probably the two most relevant ones are Recon Africa, who are drilling in Namibia. They're in the same greater rift system, which is the Zambezi rift system, which runs west to east, and they're in the Kavango Basin, which is a sub-basin of the Zambezi rift system in onshore Namibia. And they acquired their project at a similar time in 2019, have worked it up. They don't have the data set that we do. We've got gravity aeromag 2D seismic and some very, very material structural targets that we've already identified. Recon, a very pioneering program where they are just drilling off some regional aeromag and looking at the basin configuration and drilling some stratigraphic wells to find out some information. We're fortunate in that we've got outcrop of the basin further to the west and the seismic data, which allows us to tie that into the subsurface, and so we know it's there. We know where it is, in a depth space, and so we know what we're targeting. And Recon have undertaken a pretty interesting program where they've gone basically and sole risk this and prove that you can with when you are chasing these basin opening positions, and if it works, it provides you with a huge amount of running room and material uplift on success. We're at a similar program, similar part of the program now, where you're getting to the exciting exploration phase. It is a little bit slow through this period for people where you are doing a technical evaluation and organizing your above ground issues and commercialization strategies. But once you get into this exciting part of the exploration program, which is your seismic and drilling, things and the risk and reward balance side of the equation really starts to tilt. And we've seen that for some of these high impact drilling programs that are going on at the moment as well. If it works, it's pretty fantastic, and you can provide a serious uplift for investors through this part of the program as well. And so I guess when Recon went out, this was in about September last year, they went to raise 10 million to undertake an initial drilling program for one well. They got demand for 23 and ended up taking that along with I think it was a 1-for-1 warrant. They raised money at 60 cents to the 1-for-1 at $1, and has resulted in a significant re-rate in their company. So for us, we're entering this phase of our program now, and it's going to be very exciting and huge amount of value created for everyone. And yeah, we're with this capital raise we've just achieved, we can make sure that we can get through and de-risk this asset further through additional seismic and getting towards the drilling now, where we've ordered the long lead items. So just in summary, we've been very fortunate to secure first mover advantage in this basin, and that's because of our unique competitive advantage and having access to the country and the experience there and the ability to know how to get things done and navigate the waters. We've secured multiple offtake MOUs with blue chip customers that will see us be able to monetize any discovery rapidly. We're in a very, very hungry and undersupplied market in the region, both domestically and regionally. We've got a government that's very supportive and willing success, and have been putting in place the necessary framework to enable us to commit serious funding to this, and but also put in place the framework for the future that will see us develop this very, very quickly. being onshore, it's a low-cost opportunity, and we're able to chase a very, very material target. And I think that's that's probably one of the unique things about this company and this asset, is you don't really see these things of this sort of size onshore anymore that haven't been drilled. And it's not because of the technical side of things; it's because of a combination of the timing when Mobil were there, and the market conditions for gas, but also following on from that, Zimbabwe being a pretty tough jurisdiction to invest in until the new government has come in and remedied that. This forward funding now puts us in a very, very strong position. And as I've mentioned, we wanted to make sure that we could secure these very, very competitive rates for the seismic campaign, execute it on time, and also be able to order our drilling long lead items. We're starting to see with the recovery in oil and gas that the market is starting to tighten, both for equipment and for services. And so we want to make sure that this planning that we've been doing during the downturn and getting us to this point, we don't start to experience some cost creep and schedule creep as well. So we want to keep this on track and drill this as quickly as possible. Also, I think importantly, having been able to put away a very, very good capital raise and see the company well funded, it does provide us with options. Typically as a junior, when you're trying to fund work programs, it is a balance of what your forward work program is going to require in terms of capital cost, what your working interest is in the asset, and striking a balance from a dilution point of view of what you try and fund through a farm out versus what you can try and fund organically. And funding things organically and maturing it through some of these phases like seismic allows you to add a significant amount of value, which then allows you to dilute yourself from an asset point of view lower going forward. So it is always a delicate balance, and you always try and look at what the see-through value is from a funding perspective, and diluting at a corporate level versus a funding from a farm out perspective and diluting at the asset level. So I think what I'm really pleased about it, having completed this capital raise, is we now have options, and that's a really great position to be in. And so the plan is to still go through this farm out process and try and close that. But I think in the event that is delayed, we've made sure that we're not putting our work program in jeopardy, and timing and costs that we've locked in for this forward activity as well. So that's been a decision that we've made, which I think is putting us in a very, very good position going forward. We've got a very highly experienced board and management team, and also significant local experience and knowledge of the operating environment in Zimbabwe. And I think finally people are starting to realize that compared to some of our peers in the region, Recon and probably Renogen in South Africa, who made a gas discovery in the Karoo a few weeks ago, these systems do work. They've been overlooked for a long time, where you've had people chasing the younger stuff in the East Africa Rift system, but that we are significantly undervalued. But we've got a very, very exciting period ahead that's going to create significant value for our shareholders and investors, and for the country as well, importantly. So that's the end of the presentation side of things, and I'll go through to the Q&A. So I've already had some come through earlier on, and I've just tried to put these in different categories. I think probably one of the most asked questions from a lot of our shareholders is, why was there no retail purchase plan or participation along with this capital raise? Again, it's always one of these very difficult things when you're undertaking these programs. And what we've tried to do is to bring in a host of new investors, particularly institutional investors from the East Coast, who haven't been familiar with the Invictus story. I think people are now, and when this has been presented to them, when we were undertaking the roadshows last week, that it is a very exciting and material opportunity, and that's why we had a significant oversubscription in demand when the book went live on Monday morning, which was very, very pleasing to see. You always have to strike a balance with being able to execute a capital raise, particularly of this size, and being able to do it quickly. I think sometimes the risk with share purchase plans is that the price really tends to drift. It takes a long time to complete. You're looking at sort of 4 to 6 weeks, and over there it can become quite listless from a share price point of view, and as it drifts, as some people sell down to take up the share purchase plan, and you end up no better off. What we've tried to do here is bring some new investors into the company and onto the register, and we've had a number of institutions come on board, which is really pleasing. And I think particularly for an exploration company, you don't typically see institutions and funds participate, but this is such a compelling asset and a really exciting period ahead of us, I think, and that's been shown in the demand that we had for the raise. So it is tricky. The pricing of it is tricky. It's not something that we took lightly. However, in the future, but I think we have remedied that perception of come issue and an overhang. But in the future, that is something that I think we will definitely allow our share purchase plan for our long-term retail holders to participate in, and we are very grateful for everyone's support. But hopefully that explains the rationale behind how we went about executing this raise. From some technical questions, this is around the SEEP side of things, and something that you often get asked and look for when you're exploring. SEEPs aren't the be-all and end-all. Sometimes they do indicate that there is a working petroleum system in the basin that you're exploring. We have, through our geochemical analysis that we announced in, I think that was late 2019, recovered live oil generated at surface to the west of our license area in the Cabora inliers. So that source rock has been buried deep enough, gone through the oil generation window, and then popped back up to surface, and so has been in the temperature window to generate oil. Some of the reports that were observed when we were doing our reconnaissance program for our seismic campaign last year of water wells being contaminated, we have sampled those, and that's undergoing analysis at the moment. Again, there are sometimes other reasons why there can be hydrocarbons present in water wells, but we're also very encouraged from that reconnaissance program that we did that there's a significant amount of seal potential in the younger sections that wasn't really looked at by Mobil. They were really focused on the Permian, play rather than the Triassic and younger plays, which we really like and think have a good chance of being successful. But again, SEEPs aren't the be all and end all. In Saudi Arabia, I think there's 1 or 2 SEEPs in the whole country. You've got the Gawar field, which is 80 billion barrels, and no SEEPs anywhere near it. And so it just indicates that you've either got faults to the surface and it's traveling up along those faults, or else you've got a very, very good sealing system, or else there's no hydrocarbons being generated in the basin. But it's not definitive. Uganda's a case where there are SEEPs, and that led to some of the success early on. Kenya, however, in the Lokichar, where Tullow and Africa Oil were successful, doesn't have any active SEEPs. So it's not, it doesn't really mean anything one way or another. It's always nice to see it because there's source rock there, which is a great start. But we've already sort of ticked that box with this basin and know that it's generating hydrocarbons. And then there was another question on an extension of the East Africa Rift System faults. So the East Africa Rift System is a younger system, and that runs north-south, generally from Malawi all the way up through into Ethiopia. There is some faulting associated with the formation of the East Africa Rift system in the Cabora Bassa, but it is a different system, but it is the same type of rift basin setting, and also the same type of source rocks, being fluvial lacustrine. So although the basin that we're exploring in is older, being majority Permo-Triassic, there is some younger sediment as well, which is absent in some of these other systems in the Karoo, whereas the East African Rift system is really quite a lot younger, Cretaceous and Tertiary. On the drilling timetable, the question was, the drilling seems to have been delayed from mid-2020 till 2021, 2022. That's been a combination of things. Firstly, obviously with the downturn in the industry last year associated with COVID and everything else, that's been unavoidable. But also making sure that we have this production sharing agreement in place that sets out the framework and the rules that allows us to commit serious capital to this asset. And it's very important that we have that put in and upfront so that everyone knows the rules and that it's stable and they don't change. So that's been one of the other side of things, in making sure that we are happy committing serious funding and having those agreements in place, which allow us to do that. Probably one of the benefits, though, that has been realized from these delays and the industry downturn that we had last year is that service costs and equipment availability has become much easier. We're looking at much cheaper seismic costs than we originally would have, and we're looking at much cheaper drilling costs than we originally would have, as well as rig availability. So this time last year, we were really scrambling around to look for a rig availability in the region. One in onshore Mozambique was locked up in a 4-year contract, and we were trying to find a gap in the schedule there, or get onto the back of it, which would have seen quite a lot of delay in that side of things. With the delays with the downturn, we've now all of a sudden got a number of rigs available to us in the region. So that's why we're going through this rig tendering process as part of this forward work program, and some funding from the capital raise is going towards that, so that we can get the sharpest rates, the right equipment, so that we can get after this and get it done quickly. So we don't just want to, we haven't just wanted to rush it for the sake of drilling a well. The conditions have to be correct, and we need the right equipment to do it as well. On the above ground side, should we be concerned in any way regarding the geopolitical situation in Zimbabwe in the near and short term? Zimbabwe is one of the most stable countries in the region from a political perspective and a security perspective. Very, 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 very stable environment. You've got no security concerns there whatsoever. We've got very, very good government support, and so from that side of things, we don't have any concerns. I think we've demonstrated through this last 3 years that we've been operating there that we know, that we know the business environment and know how to operate there. So I think people can take confidence from a very, very strong management team that knows the environment there very, very well. So those were the last that I had in the pre questions. So a couple of others that have come in on the Q&A. So on the license duration to 2023, and what rights do Invictus have to extend it? And is this a concern as to tenure? So again, this is one of the items in the production sharing agreement and the PEDPA that is in place, and that is to make sure that we do have that continuity of tenure, and with that agreement provided that we fulfill our minimum work program obligations, which is seismic, and so 300 kilometers of seismic is the minimum, and the drilling of one well, that our tenure is automatically extended when it comes to the next expiration period, and there's no discretion. So again, one of the important things that we're putting in place, so will automatically be extended by fulfilling this. And then also beyond that, beyond the expiration phase, that provided we put in a development plan if we're successful that is, follows the sort of the form of the applications for when you're putting in your development plans, then those are automatically granted. So we've made sure that we have that continuity of tenure through the production sharing agreements. Another one is the production and profit sharing agreement with government, on track to be finalised before the end of this month. I think they've obviously what some people have been aware of is some talk in the press in the local press, and was provided some statements from the Ministry of Mines, who will be signing the paper agreement that will be finalised before the end of the month. That's the same information that we've been given, and so we've had nothing to the contrary, and look forward to signing this and getting on with our work program. And the second part of that question is, has there been any progress on the farm-in offer announced in December 2020? So yes, there has been some progress. We needed to tick off some of these items on the agreements with government, to make sure that again, for investors coming in, they want to see that framework in place so that you can invest in confidence for the long term. And so signing these agreements will fulfill some of the conditions precedent that are still outstanding for this farm-in offer. We are still pursuing it. In fact, I had discussions with them yesterday morning, and so we're working through that, and some further detail will be announced post the signing of the PEDPA. Some other questions: can COVID or other political issues delay the drilling in second half of 2021? Look, COVID is wreaking havoc in supply chains all over the place, with freight and also border issues and customs side of things. So yes, it's a possibility, but again, we want to go out now and order these long lead items so that we make sure that we can keep our schedule and program on track. So we are going out now to do it, rather than waiting and trying to bank on conditions in the absence of COVID for normal lead times. So with the end of question from Rob Penfold, the independent assessment, were the chances of commercial success estimates provided? So yes, they were, and those are in that announcement on the 1st of July 2019 on the independent chances of or the independent assessment on commercial success. So fortunately, we're chasing a stack target, and so that means that you have some dependent and independence of those various horizons. We've got multiple sequences of source rock, reservoir, trap, and seal, and so failure in one single horizon doesn't condemn the others, because there are some independent variables within those. Drilling a stack target, though, does increase your chances of success. So whilst your individual horizons and looking statistically, you're looking at a sort of 1 in 5 to 1 in 10 chance, generally speaking. That probably with the way the probabilistic aggregation works, and I'm not going to get into the statistics, but drilling a stack target, you're starting now where you're starting to get into the probably 1 in 3, 1 in 4 type scenarios of one of those horizons coming in. So not necessarily all 5, but 1 in 3, 1 in 4 of one of those horizons working. So that's why having a stack target like this is really attractive. Another question on the production sharing agreement: will Invictus or the Zimbabwe government make public the conditions? That's something that's still being sorted out. Obviously, both parties need to agree. We're obviously happy to make the conditions public, and I think we would encourage government to do so from a to so that it can be benchmarked against other countries in the region. It is going to be a very good fiscal arrangement for both contractor and government, and similar to those elsewhere in the region that are also frontier. So that'll be worked through once it's signed, and whether it's the whole contract or some of the key conditions, we'll work that out. But we're confident that we've put in place a very, very good agreement that works for both sides, and the government has had it independently assessed, and I think also with going through that process, that provides them with comfort and certainty as well. So a question on the cap raise and roughly what percentage of the raise went to institutional investors. It was probably, I'm just trying to think through the book, because there was a lot of scale back, obviously, with the demand that we had, and I think overall it ended up being 65-70% to institutional investors. So very, very pleasing from that point of view for to have a large capital raise like this supported by institutional investors for an oil and gas exploration company. Something on the drilling timetable and results. How long after the commencement of drilling will the results start to flow through to the market? They'll come through straight away. With the target this size, we know what we're chasing. We'll know instantly whether it's successful or not. Having said that, we do have multiple horizons, so so there will be a phased release of results as we go through them. We're not going to be able to drill all of those horizons with one single in one single string. So we'll need a couple of casing strings to achieve that. So there will, for a drill this for Nzarabani, we're probably looking at around 60 odd days. Not long, and it'll be a very exciting and nerve-wracking time when we're drilling, but as a public company, we release our results as they come through. A question on do we have the technical and management capability to drill without a farm out? And is this preferable as capital now clearly appears to be available compared to the current farm out dilution on offer? So yes, we have the technical capability to drill this. We're onshore, which is very important, and it's a relatively easy endeavor to do. And there are a lot of drilling contractors available that are able to execute this on our behalf, and you second them into your team. When I was at AWE, we did that. We didn't have our own drilling department. We used Aztec Drilling, and very successful. So with offshore is different. You do need that operating experience and capability to do it, because it is a much more complicated environment being offshore, whereas onshore, a lot easier. And so that's not something that that we have any hesitation to do if required. It'll be a lot more work on our part, of course, but we're not afraid of that, and it'll be a lot of fun. Operating, it is a different kind of energy when you're operating and in the thick of it compared to being a non-operated partner. So if required, it's not something that that we're afraid of. In fact, it'll be a lot of fun, a lot of work though. Another one is, how much cash will the company have remaining after purchasing long lead items and locking in seismic contracts? So if you look at the breakdown from the capital raising presentation, from a G&A point of view, we've out of that, I think we'll have about $2.5 million, as well as a number of out of the money options that are in the money options at 6 cents, the majority of which still haven't been exercised. So from a cash perspective, from the company's point of view and the day-to-day side of things, we're in a very, very strong position. And then a final question from Rob. And again, this is on dilution, and says whether it'll be placing or a farm out as part and parcel. If your share price was to align with, say, Recon, would you rather farm down or seek investor support for the drill? Again, this is something that is pleasing because we've got options now, and it's as I said, it's always a delicate balance in trying to look through what your dilution is from by raising capital to fund it, or by going through the farm out route and bringing in additional parties and diluting at the asset level. So the great thing is that we've now in a strong position and can pursue either path. So we're still continuing down this farm out path, but again, we're not afraid now of, and I think what's been pleasing is we've had the demand and the support from this capital raise that we've just undertaken, that I think if we did want to go out and do it ourselves, we'd be very, very well supported. And so that's a great position to be in, and I'm really, really happy. So if there aren't any more questions, I think we'll wrap up. Just give it one or two moments more, and if not, then we're finished. So thanks to everyone for watching and listening, and really appreciate everyone's support from both our existing and our new investors. Looking forward to a very exciting period ahead for the company. It's going to be a big year for us. A big next 6 to 12 months, transformational for both the company and for the country if we're successful, and looking forward to getting on with it and getting onto the exciting part of things now. And there's some good days ahead of us, and I think after a difficult period last year in the industry, there are a lot of green shoots, and we're entering into this phase of the right part of the cycle where service costs are still low. We've got a strengthening oil price and industry environment, and so it's a really exciting period ahead of us. And just great to be in this position now, and looking forward to getting on with it. So thanks everyone for your time and support. And if there are any other questions that people want to ask, I'm always available. You can contact me. Our contact details are on the back. I think a lot of shareholders will tell you that I'm always available to answer questions and take phone calls and answer emails. Look forward to the next period for the company, and it's going to be a lot of fun and very exciting. So thanks everyone, and take care.